The start of a new year is a great moment to review the holdings of the world's most successful investors, such as Mr. Warren Buffett, to see what they have predicted for the coming 12 months. Which is why for today's video here at Investing Path, we will analyze and dissect Warren Buffett's top 5 stock holdings going into 2023. But before we go on, make sure to give this video a like and subscribe to see more of our future uploads as we go on. Now, let's not spare a minute further and let's dive in. For some background, this video will examine Berkshire's top 5 holdings. However, it is important to keep in mind that these 5 companies are only a small part of Berkshire's portfolio of 49 stocks. Even while they make up 75% of the portfolio, that is by no means the whole story. 2. Not all of the stocks in the Berkshire portfolio are actually Buffett's. We can assure you, however, that the top 5 stocks are all Buffett recommendations. Finally, keep in mind that Berkshire size means it can only make meaningful investments in the largest corporations worldwide. American Express is 5th in Berkshire's portfolio, making about 6.91%. So, Buffett made his first investment in American Express in 1994 and hasn't touched his holdings there since 1998. That may sound completely out of the ordinary, but is actually fairly typical for Buffett's investment style. He hasn't found a reason to sell his investment because he is so intent on buying exceptional firms and holding them for as long as he can. Accordingly, he hasn't done it. To construct the position, Buffett spent a total of $1.3 billion. Today, that investment is worth roughly $20 billion. Just what exactly does the American Express team do? Well, we're sure most of you are already familiar with them. Along with Visa and MasterCard, they are one of your world's 3 largest card providers, and they generate revenue in a number of ways. The company's U.S. consumer credit card division, which includes fees and interest received on U.S. consumer cards, accounted for the bulk of revenue in Q3 2022. However, if you remove the cost associated with each of these revenue segments and focus on their pre-tax segment income, you will notice that the merchants actually account for a sizable portion of the total. And that explains American Express' business model. Simply, Wall Street's built-in discounted cash flow model reveals a respectable margin of safety, and its current P is significantly lower than its peers. Even if you don't immediately rush out to buy it, it is impossible that this is a company worth learning more about. Coca-Cola is the 4th largest position in Buffett's portfolio, accounting for 7.57%. You've probably seen Warren Buffett downing this dark elixir of life many times over the years. After all, it is the iconic Warren Buffett stock. As for the stock itself, Buffett made his first investment in Coca-Cola in 1988, after the abrupt stock market crash of 1987 had caused the stock price of Coca-Cola to drop by around 25%. This was the first example of, the Buffett technique, which has become so popular among investors. The strategy of not only purchasing a fantastic company at a fair price, but also one that has a wide, deep moat. In 1989 and 1994, Buffett committed further funds, bringing Berkshire's total investment to $1.3 billion by 1995. Like his stake in American Express, Buffett continues to own the shares, which are currently worth over $22 billion, not including dividends. What we have learned most from the Buffett's decision to invest in Coca-Cola is the significance of moats. This is the primary reason why Buffett has never been compelled to sell, and it is also the main reason why the stock is so valuable today. Coca-Cola is simply in a league of its own when it comes to brand recognition. Despite competition from a wide variety of other beverages, consumers consistently prefer Coke, a trend that was first noticed by Buffett in 1988 and has since led to continually increasing sales volumes and prices for the company. What we mean is, last year, Coke raised their prices significantly due to inflation. And which way did their sales go? Now, let's check out Simply Wall Street, where we learned that unlike American Express, Coca-Cola is trading at a P of around 28, and does seem fully valued based on the discounted cash flow analysis. Still, it is worth your time to learn more about why Coca-Cola is such an intriguing Buffett stock. Next, we will discuss Chevron, which will be Buffett's third largest holding in 2023. Unlike American Express and Coke, which have been part of Berkshire's portfolio for a long time, Chevron is a relatively new addition to the company's holdings. First, purchasing shares in quarter 3 of 2020, Buffett's massive quarter 1 of 2022 purchase of 121 million shares propelled Chevron to Berkshire's fourth largest stake. Though we are no expert on oil stocks, we believe this one to be very simple. In 2007, Buffett explained that his firm's investment in an oil stock was motivated by the firm's belief that the stock offered a great deal of value at that time, rather than any expectation that oil prices would rise. In the past, we have invested in oil futures on the assumption that prices will rise. Actually, what we have seen in the world since Buffett started owning both Chevron and Occidental is that supply of oil has been restricted and demand has increased, which has helped oil prices stay relatively elevated over the past year or so. It is important to note, however, that Buffett is not motivated solely to buy by changes in the price of oil. Regardless of what happens with oil prices, he insists on robust economics at the core business. Okay, let's move on to Buffett's second largest stake, Bank of America, taking up 10.3% of the Berkshire portfolio. This is one of only two double-digit holdings. For example, Buffett obtained stock warrants in 2011 that entitled him to purchase 700 million shares of common stock at 7.14 cents per share, making Bank of America stock a regular top 10 position after the third quarter of 2017. There are now more than a billion shares in the equity position. As of the right present, a position's worth can be estimated at $30 billion. Now, we're not exactly expert on bank stocks, but if there's one guy who isn't, it is Mr. Warren Buffett, and that's what we think you should take away from this. Buffett's initial investment in Bank of America was a prime example of how he was able to profit handsomely from the stock market by sticking to this area of expertise. According to Reuters reporting, Buffett first invested in Bank of America in 2011, spending $5 billion on preferred stock and issuing warrants to purchase an additional $70 billion in ordinary shares at a time when many investors were concerned about the bank's capital requirements. If you have an in-depth knowledge of the industry in which the company operates and the business itself, as Buffett did with banking. And now, at long last, the first stock. Apple is Warren Buffett's largest investment. The stock now accounts for 41% of Berkshire Hathaway's stock portfolio, which is 4 times larger than the Bank of America's stake. Perhaps not in terms of percentage, but certainly in terms of absolute dollar value. This is a relatively new view on Buffett's part. Back in the first quarter of 2016, Buffett made his first investment in Apple by purchasing 39 million shares. However, his major investments in Apple did not come until the fourth quarter of 2016. During that time, Apple's price-to-earnings ratio was between 13 and 16, so Buffett's purchase of 950 million shares at a cost of about $36 billion represents a classic example of Buffett buying a fantastic business at a reasonable price. Investors were worried that Apple's top and bottom lines had plateaued because of iPhone oversaturation, but Buffett was able to see through the noise and discover that Apple's brand and switching mode were so powerful that the company could still grow its top and bottom lines even if iPhone sales had stopped growing. Even if iPhone sales were to never again grow, even if only due to price increases, Apple stock was selling at a reasonable price-to-earnings ratio for a large technology business because of the company's moat, which gave it pricing power. He invested as much money as he could afford to in his stocks, and boy, he was rewarded. The initial $36 billion investment has grown to a whopping $120 billion today. But oddly, investors are once again growing a little bit apprehensive about Apple as the price has declined roughly $30 in the last 12 months. It will be fascinating to see what Buffett does with the stake this year. Apple was formerly tremendously expensive, but a study from Simply Wall Street suggests the price has been merely brought down to a fair value. It is entirely possible that we won't see anything at all. In conclusion, these are 5 largest investments that Warren Buffett has made for the year 2023. Now, which one of these are you interested in investing to and why? Let us know in the comment section, and we'd be more than glad to join in the discussion. This is Investing Path, and we hope you found this video quite helpful, and if you did, please don't hesitate to give this video a like, subscribe, and hit the bell button to see more of our future personal financing and investment updates for you. Thanks again for watching, and we'll see you soon. Goodbye!